Okay, so today the QQQ, the Nasdaq, bounced more or less as expected because today we have the FOMC meeting where they made a statement at 1 p.m. So there was a lot of front running, and you can see from the QQQ um, open relatively flat, and this is its initial um, morning run essentially established a tone. Looking at the 15, you can also see that it was approaching the 15, and once it approached the 15, broke the 15, and stayed relatively constant. So at this point, it does look rather bullish at this point. Um, Now, we know today is reversal Wednesday, so the entire trend, looking both the 15 and the 15 is kind of reversing, so we can say the uh, reversal Wednesday sort of went hold again, meaning the play, the market bias, the sentiment appears to be in a positive again, given the fact that it's above the 15 but still below the 60. So the next point is, where do we go from here? Well, I would think it would play around with the 15 a little bit before breaking and trying to meet up with the 60. And of course, on the first meeting of the 60, most likely will fail. Most likely will fail or bounce. There will be a reaction at the 60. So you will see at some point it will play around. Whatever it does, intermediate. As long as the time frame in time, meaning the duration in time, is not on a negative bias, where it's sort of what I mean by that is that it doesn't go, crash or reverse as far as staying near the 15-minute trend line. If it's near the 15-minute trend line, bounce around and continues to go toward a new high. Once it breaks this new high tomorrow or seem to break out of it, the next step would be the 60-minute. The first test of the 60 normally would mean either it overshoot a little bit, then reverse around and play around. There should be a reaction at the 60, and at that point, it either reverse and go down or continues to go higher. We don't know that until it comes. Once that comes, that step, what we would do is we would evaluate the volume. How does it look like the chart, the setup itself? How does the other players, the other equities in relation to the QQQ, and also the option volumes? That this will be important too, as far as determining the direction. I would say overall, looking, this is essentially the global market or the main indexes, the Dow Jones, the SPY, the IWM. At this point, you can say, well, okay, we're not gonna crash this week, but there may still be a potential, crash because we're still not out of the wood yet. In the sense that this bounce may just be a temporary bounce. If you lose interest, meaning if the buyers lose interest, the longs no longer is able to master a short squeeze. It's all about getting the squeeze. If there's enough interest, then the squeeze will happen, and that would essentially power the next leg higher. Because in this market, the way it works is most gains most momentum of as far as the directions and the trend of the individual stocks and even the indexes tend to be more or less of chasing. So chasing meaning newer highs, pushing, essentially just ramping it higher and higher. You will see in a bull market conditions like this where it's more or less um, the rate of change on the 15 minutes will be a lot greater, right? It will be more or less like this. You will need to see this type of rate of change. So rate of change is actually a factor as far as evaluating whether or not the bull legs or the bull rally will continue, or this is just a temporarily just a temporary bounce that essentially would reverse. At this point, you don't know yet because it still need to play out. At any time, you can have a wicked turnaround, and it would just the rate of change going down would be almost catastrophic, right? But again, it can also go the opposite way. So what I'm really trying to say is that the movement is gonna be extreme one way or another, either Thursday or Friday. We don't know yet. It could potentially be Thursday. Now, Thursday, we do have some market data, initial jobless claims, and the market manufacturing PMI, leading economic indicators. And then on Friday, of course, you got the new home sales. And of course, also Jerome Powell will give some remarks at 10 a.m. So that may essentially Friday would probably be more. Well, we don't know. Okay, depends on what happened Thursday. If Thursday is mute, which potentially right now you can see these 2 days, Tuesday being more or less technical, but there are extreme movement. Today is also more or less technical, although there are still in the morning somewhat of an extreme movement. Thursday, you may just see something completely different, whether it just the push or the flush, right? Don't know. Or it could still be technical. It could be technical Thursday, and then Friday would be that one where it push or flush. So what am I seeing right now? Obviously, you can see on the QQ on Amazon is sitting more or less at the 100-day moving average. So that on Monday, this is Wednesday, Tuesday, yeah, on Monday, the gap opening and the test of the 100 obviously fail, went close to the 200 days moving average of the 38.2 on the Fibonacci. It's more or less this number 3300 was where it bounced, and now it's more or less close to the 100-day moving average to try to test that, and that's at the 61.8. You can see this level right here is a level of key interest. As long as it stays near the 15, this is the 15. As long as it's, and this is the 61.8. As long as it stays near this range and does not reverse, then you can expect it to break it eventually. That at that point where it breaks, you'll see more or less an increased volume in the uh, at that point you will see the chasing, meaning the volume of the call options will come in, as opposed to there will be steady option volume on the call side, but more or less when it starts to push, the volume will follow the direction. I mean, it'll come in response to the price action, as opposed to the volume coming in and then the price action adjusting to that. I believe it's more or less the other way around, the former rather than the latter. So I'm expecting a play of the 15. Whether it breaks it or not, I don't know. That's not my place to call. That's my place to call is to set up the technical analysis, meaning potential situation where you can determine based on the results of the price action, based on volume. Volume is always important, and I tend to forget it for whatever reason. If volume is sufficiently good as it breaks out. No, yesterday I got tricked on a volume. You can see right here on the 5 minute. You can see this mediocre volume. Let me put the crosshair. This mediocre volume that came in on the breakout tricked me. Because I was expecting a breakout and then the 61.8. This line right here, the 61.8 that was at the time was all the way up here. It was like, oh, that's a magnet point. It's gonna go to 61.8. No, it's a trap. It's a trap because the volume is mediocre. And so, yeah, that was something quite silly of me to actually fail for that. And the only reason I failed for that is because I had missed out. Essentially, every one of this missed. I missed by, I mean, just point one, point two. I barely miss out on, trying to get In this case, getting the puts as I was tamming the top, and I almost got it. Of course, I missed, so I lost out on this maneuver down, which is potential gain of about 1,000. I missed this one going up. I was tamming right at the bottom, missed it. Again, I tammed right at the bottom, missed it. So I had 3 miss at the time. That's, if I held on through all of that wiggles or whatever that price movement to the best that it possibly can, I probably would have been up 3,000 based on this opportunity miss. I normally don't count, but because I missed 3 of them, it was a pretty big and frustrating to miss out on 3 very close. I mean, it was like right there. It's almost like very often I just go right too close because most of the time I think they do try to overshoot a little bit or trick you, but a lot of time you just can't really determine statistically whether it meets it, breaks it, or go really really like not like barely almost getting there. In this case, each one of these turns, this barely miss, this barely miss, this barely miss. So in this case, this setup was a barely miss or barely reaching where it should reach. And yeah, so I missed out on this potential 3,000. Then I chased on this one because this is a breakout, right? This was the first breakout. I would say, well, okay, this is the first test, the second test, the third test. I missed the volume, and then of course the 61.8 sitting right here at the time up here. I was like, okay, it's gonna go to 61.8. There's no doubt about it. I was convinced, seeded my head. Again, a brain seed is when you self-convince yourself of something based on what you see, but it's really just a trap because the data that came in here, I mark low volume. This volume is missing, but you can really see what I'm implying here by I'm saying low volume. The volume wasn't sufficient. It was a trap. Boom, all the way. I don't, of course, I added one at the VWAP, expecting a bounce. Again, a +1, and I keep writing down notes on don't add +1, never +1 again, never add. But I still do it, and of course, that lost 1.2K. Don't remember exactly where I cover. I didn't cover at the low, of course, but it's sufficiently where I lost 1.2K when I shouldn't. There was no chance of. I mean, once it breaks like this, it's going. There's no way. And of course, I did make this gain right here, and then I held. So I came out, I think, flat even for the day. Today, did I did fairly well, although I did missing holding this rally for whatever. I was just scared. Um, I forgot about the FOMC meeting today. The statement at least at 2 p.m. So I forgot about that. Normally, that meeting often in the morning or the initial before noon, it would somewhat give a confidence that there won't be a crash. And if there's not a crash, the buyers would step in and you get this type of rally. So I missed the bulk of this one, which is quite frustrating because you know, I hit the right read. This is technically too doji. I got the read and I cover, I think, somewhere up here, so I missed out of that, which is silly of me. That's another opportunity lost that I hit this one perfect though. So yesterday I hit this run up was more or less perfect on that call option that I bought. This call option just got scared, right? And I should know at this time I should know to establish the right habits, to not be scared, and to be able to just hold it. But I'm still just based on this risk management strategy. I'm a little bit more scared. I did sell a straddle at one point. I don't remember exactly where I sold it. Maybe here. And that was a good play because you can see after the FOMC run, at this point, man, I got scared because the movement was so wicked. So of course I'm gonna get out. I'm not gonna hold that straddle. Selling that straddle meaning sold one call option, one put option, and that duration from here to here pretty much gave me, I think, 500. Yeah. So I was up, and then I made another trade. So I made 800 today. So I'm at an all-time high again. As far as the close, at an all-time high. Intraday, I'm still a couple of hundreds away from getting an all-time high. But at this point, you can see, I mean, a lot of potential miss I missed because it was just so scary. Once this movement comes about, it's just really scary. But more, the other thing I didn't like when it does this is that the bid and the ask on these options are like 3 points, which is extremely stupid. I don't know why that happens, but I guess because of the way the volume is coming in and the market maker, they just realize that the instability of this movement, they know ahead of time that the instability of this movement, and there's just too many option buyers on both the call option and the put options, I guess. Though the put options, you don't see that much volume. There was enough, I guess, price action on both ways that the bid and the ask was essentially in every strike points. The bid and the ask was at least 2 points. So I didn't want to do. I was kind of worried because I don't know how to get in using a limit order, but how do I get out? Sometimes you can't get out on a limit order, especially when the bid and the ask is at 2. If you try to use a market order, well, you're going to lose 200 based on a market order because the bid and the ask is a spread of 2. So losing 200 on a market order, that just, I was like, man, I better not get into it. And that gave me a little bit of a hesitation, even though I see this, quite easily to play this whole bid and ask thing that I yet don't understand why, just because the volume is a little bit higher or the instability of, I don't exactly understand why sometimes the bid and the ask are so wide. It really has to do with risk review. I guess the market maker not willing to take the risk on the opposite side of the options, so they put the bid and ask so high so that it really handicaps you because any market buy or sell you make, you're gonna be down 200. So you need to close the position too. So you're down on a market trade of open and close of 400 off the bat on any position. So being off 400 just to get in a position and getting out of a position is not something I want to do. And so that was quite frustrating. I was able to get at one point, I think up here, I was able to get 200 because the 61.8 was just too enticing, and I was able to get that one on a limit order and a limit close. So I'm happy that I was able to get a limit order and a limit close and got 200 on that. So overall, pretty decent. I do have my notes, and I was calculating that this month I lost a total of 16,000 on bad plays, on traps, just the main losses that I track on these guys, right? Like 1.2K. And here I think yeah, 2K on this one because this gap down, and this was a trap level on the Fibonacci 61.8. So I lost 2K on that. Another 1.2K loss on this 5-minute trend line trap. I think there should be another loss right here, and this trap right here. Somewhere here, this trap right here on VWAP, I lost 1.7K. So I lost a total of 16,000 this month on just traps and bad habits. Just traps, bad habit, bad disciplines, bad brain seed, bad. Keep writing them down, but I need to find a way to figure that out because those 16,000s, if I can find a way to not get to limit them to, I mean, even 5,000, even anything, that would just make my account so much better. Opportunity loss, I had close to 10,000 on opportunity loss, so, but that's the more difficult one to value because opportunity loss or something that is not, it's hard to measure essentially because you have these misses, right? So you write down, yeah, okay, this is a miss, this is a miss. That's a 3,000 opportunity loss. But would you really realistically get all three of this? No. So you have to say, well, maybe I'll get one or two, so that'll be a 2,000 opportunity loss. And there's other opportunity loss that come about that's just glaringly based on bad habits, bad trading discipline, I mean, everything. Any traders who does this for a long time know certain tendency that you have that are just tremendously bad. It's just your nature, and it's tough to turn your nature around. You just have to find ways. I've been trying to find ways over and over again to try to get rid of these bad habits, these bad natures, these bad tendency. Writing them on note cards, writing down on charts, going over them, doing videos like this over and over again, reviewing these videos over and over again, and still, I do tend to self-fulfill myself and follow into the same traps, being overconfident, not risk management correctly, not seeing the right traps, rushing, being impatient, not taking small losses, adding one, adding two, timing the bottom, timing the top, counter trending, counter trading. So all these things, I just need to find a way, one way or another, to get rid or limit them as much as possible. And once I'm able to do that, I think I can get to the next level and really break out. And maybe one day even go into, I guess consider my this professional, being able to do subscriptions, newsletters, going out and actually trying to promote my technical analysis and my system. But at this point, I don't think I am at that level yet. Until I can see consistent performance, at least for another year or two, and really break out on that performance. And being able to read the setup, 9 out of 10 times, I need to be able to see at least eight, seven, eight, you know, somewhere where it's a consistency of 80% on being able to read the setup and telling exactly based on technical what is going to happen once you see the setup comes about. Because the setup, there's actually probably 100 different setups that can come potentially based on all these signals that come in. Of course, the program sees them automatically, and that's why, you know, financial institutions like Goldman Sachs, they can actually, have 60 days, 90 days, months on end where they don't have any days of losing trades. They don't lose any trades because they front run it and they know how the programs work. And the programs base themselves on algorithms, and those programs automatically based on the AIs and the algorithms knows what setup is going to come about. Mm, being a human trader, you got to be able to take that input, that signal, and kind of relay based on statistical, correlation of what notes you have written in the past. Being to be volumes, rate of change, candle action, price actions, the overall market, all these variables, volume actions, and bid aspects. There's literally hundreds of signals that you have to analyze, you know, in serial, because you can't do it instantaneously like an algorithm, and you can't monitor five different equities at one time. So it's really difficult to be as good as a robot or as good as the trading platform, no, I mean the trading institutions that have algorithms and programs that do it for them. But looking at this, the again, I already mentioned it, the QQQ will probably maintain at the 15, and then wherever direction it will go will lead to whether tomorrow or Friday will be that explosion day. So I'm expecting either Thursday or Friday to be an explosion day. So that strategy for me is, at some point I'm going to buy the straddle. Yes, buy the straddle. If I do sell the straddle, I will not hold it on I will probably only sell the straddle. If I do it, I will sell it tomorrow morning and hold it till noon at the most. I'm not gonna hold it to the afternoon session because the potential of a hijack in the afternoon is very good, especially for a Thursday. And definitely, I'm not gonna sell a straddle on the Friday. I will at some point buy a straddle, depending on how much volume come in, and knowing that hopefully they're gonna hijack it. Right now it's 33.80. It can go to either. I'm hoping. Let's take a look at it again on Amazon with um, yeah, so it's either 30, I would say going to either this 50-day moving average, which is a little bit above 3,400, maybe 3,410, or it can break down and go all the way down to this level. Uh, maybe it'll stay here, either here or even all the way to 3,300. So a straddle probably would make sense. Although right now it's still quite expensive at 33.80 is on the stop. The intrinsic value right now is about, let me see, 23 and 22. So that's almost 50 points, 48 points. So that's not really something I would want to. No, it's 24 and 20. Yeah, almost 50 point, 48. 48 points on a straddle is not favorable at this time to buy a straddle. Definitely don't want to buy a straddle when you got 48 points to gains. But maybe tomorrow, maybe in the 35. The longer I wait, the better it is. I mean, ideally, it would be somewhere in the afternoon where maybe the theoretical value is 30 to 35. I can buy a straddle and pick up 500 or 1,000 points if once it goes, unidirectional, meaning it'll go one direction, whether it'll go up to this and maybe let's potential case would be to go up to the 60 minute trend line. So the 60-minute trend line being a target point, that's above 3,400. So buying a straddle at that point, if you hold it long enough, should get you about 1,000 to 1.5 thousand. And conversely, if it does collapse going the opposite way, you will gain essentially the same, 1,000 to 1.5 thousand. Let's take a look at Tesla. See what that is right now doing. Tesla, and again, the 15 is very important. Above the 15, above the 60, pretty bullish in this sense. Google, I think, is also in the bullish position now. Yeah, so Google looks like it's going to test the 60. Bookum broke out. Should be above the 60, of course, above the 60. Shopify, let's take a look at that one. Looks like it's going up to these magnet points, so it's gonna hit the 60 and break the 60. So that's also a magnet point. MicroStrategy, this is of course Bitcoin's related, bouncing off of the 200, probably gonna try to meet this level up here, which is most likely gonna be with the 60. So that is also on a bullish trajectory. Intuitive Surgery, again bouncing off of the this is the 50. So this is, I guess this might be range bound. It did hit the 60, so this might be range bound. This may be a potential straddle, selling of the straddle if you anticipate it's going to stay in that range for a little bit. You can sell the strategy, meaning sell one call option and one put option. mRNA, Moderna, of course, above the 60. I think at some point this Moderna is gonna break and fail, but in the meantime, there's still a lot of interest in this guy, so it can easily go. This is like Game 2.0, not as 2.0, but it's similar to Game. It's type of that scenario where it's essentially all short squeeze and momentum player. So let's look at game anyway, since I did not look at it. Yeah, I'm probably gonna hit this guy and see if it breaks it or bounce off of that. This is, of course, the 100-day moving average. AMC entertainment. Let's take a look at that one. Probably, well, we don't know. It's hard to play. It's in between the 50 and the 100. Facebook, of course, failed the doji top that I mentioned. Here it is, the doji top on the weekly, two doji tops. And of course, it went 1 week, 2 weeks. Now it's at the 61.8. Uh, I don't know if I would like to read this chart, to be honest. It's at a point where it's difficult to read because essentially it's at the 61.8, so there's going to be a lot of interest whether it goes to 138.2. It can easily go to 138.2, can easily bounce, or it can easily stay flat. When there's a scenario where statistically it can go any of three direction, I would not be touching it. Let's see what Nvidia is doing. And then, yeah, Nvidia is always powerful. I mean, this guy, if you are optimistic on Nvidia, on any bounce situation where the market seems to be recovering, Nvidia is always a good one to get in for a temporary bounce, either in your small portfolio account or your day trading account or even your 401k account. Let's finish off with Apple and see where, of course, Apple has been negative and bounced off the 100. Essentially, it's at the 50. I think it probably going to test the 50. It's close to the 50, but let's see where it's on the 15, above the 15. So you can say it's going to try to get to the 50, which is also, somewhere here close to the 60-minute line. So I would say the bias on that one is up. Overall, most of the stocks that I'm seeing is the bias is up, but keep in mind the attack on the VIX. Um, so often this initial VIX is, it's just reverse. How many times are they gonna do that? Where that initial spike has no follow up. That is just so crazy. Every time the VIX spikes up, there is no follow up. It's almost hilarious how controlled it is. Every one of these situations you get one initial spike. In this case, this reversal right here was the last hour. It was probably the last 30 minutes. This reversal and then collapse. I mean, I said, how many times are they gonna do this? How many times can they collapse it after the initial run up? Well, they did it so many times. One, two, three, four, five, six, seven. I mean, essentially, and this is the only time eight. So 7 out of 8 times they were able to collapse it. Only 1 out of 8 times were they able to collapse it and then it recover. This is amazing manipulation or whatever you want to call it. It's just not really manipulation. It's just too much money in the market. Too much money in the market. Too much margin capability. Too much, hedge funds, day traders, whatever you want to call it. They can play market maker. Too many people making their business now on the stock market all because of easy money and 0% Fed fund interest rates, and they can play it however they want. So 7 out of 8 times they were able to collapse this VIX, which essentially recovered the market. So now the SPY is looking relatively positive, I guess. Well, temporarily. Again, there could be, it can touch the 50 and then fail, but at this point, you're gonna have to say it's targeted for the 50. So overall, I suppose the bias is on the positive side, is what I'm seeing. So let's see how it goes for tomorrow.